Welcome, everyone. My name is Sarah Barnes, and on behalf of Campbell & Company, I'd like to thank you for joining DonorAdvised Fund's latest trends and actionable advice. Before we begin today's presentation, I'd like to quickly go through some logistics for those of you who may be new to our webinars. Close any programs other than GoToWebinar, of course, that are running on your computer. We recommend calling in with a telephone instead of using your computer speakers. You can move your cell phone away from your computer, and if you experience any visual issues, send a chat to Campbell & Company or contact GoToWebinar at the number on your screen. Today's webinar will last 1 hour. We won't be sharing slides from the presentation, but we will be sending a link to the recording. We do welcome questions throughout. Please use the questions box in the GoToWebinar control panel that should be on the right side of your screen, and we'll also hold time at the end for audience Q&A. And now I'd like to pass it off to my colleague, Molly Sachs, Senior Marketing Associate at Campbell & Company. Molly?
Thank you, Sarah. I'll be moderating our panel today, stepping in for Aggie Sweeney. At Campbell & Company, we've been closely following trends related to donor-advised funds, and we're so pleased to bring together this group of leaders for a robust discussion today. I want to take a moment to introduce each one of them. Jason Baxendale is Chief Development Officer for the Chicago Community Trust. As the head of development and member of the Trust senior leadership team, he provides leadership in all aspects of asset development and donor engagement. Jason also served as co-director for the We Are Chicago campaign, which raised over $1.6 billion in honor of the Trust's 100th anniversary. Liz Harvey serves as Chief Development Officer for the Nature Conservancy, California. She has over 30 years of experience in Bay Area philanthropy. Her current role connects her love of the outdoors with her concern for the environment. Liz's prior experience includes serving as Director of Major Gifts at Mills College and Director of Corporate and Foundation Relations at San Jose State University. Eileen Heisman, ACFRE, is the President and CEO of National Philanthropic Trust. She's a nationally recognized expert on charitable and planned giving. Eileen has been interviewed about philanthropy and donor-advised funds on CNBC, PBS, NPR, CNN International, and Bloomberg TV, and by nearly every national newspaper and major trade publication. She was among the first fundraising professionals to earn the distinguished ACFRE certification. Today, we'll be diving deep into the world of donor-advised funds. I'll share a 30,000-foot view of DAF, and then we'll move into our panel discussion, focusing on the latest trends and leaving time for your questions. But first, I'm going to share a little bit about the big picture of DAF. This past decade, donor-advised funds have become the fastest growing giving vehicle. In 2010, gifts going into DAF made up 4.4% of total individual giving. This percentage has increased every year since, and it reached 10.2% in 2017. Assets in all DAF accounts at the close of the 2017 calendar year were over $110 billion. Collectively, there are over 450,000 DAF accounts, as reported in the NPT 2018 Donor Advised Fund Report. The accounts are held by charitable sponsors, national fund charities, community foundations, and single-issue charities. There are over 1,000 sponsoring charities. Grants from DAF to charities in 2017 totaled over $19 billion, about 20% of the assets in DAF accounts the previous year, and about 5% of all direct giving to direct service charities. According to the special report from the Giving USA Foundation released last year, the education sector was the largest recipient of DAF grants. Now, with that high-level view, we're going to move into our panel discussion. We thought these questions would be a good place to get going. Panel, what questions do you most frequently address from fundraisers, and what do you want them to know about engaging with you and your fund holders? Eileen, could we start with you here?
Sure, and thank you for having me. You know, we get a lot of fundraising questions because I know it's frustrating because a lot of fundraisers really want to know how to tap into the DAF assets that have grown so much in the last 10 years. One of the things I say to fundraisers, and I'm a fundraiser by training, so I'm talking to people that I can imagine what their lives are like, is to treat the DAF donors like any major gift donors that you have. They happen to be using the Donor Advised Fund as their vehicle for giving, but they're just like any principal or major gift donor. You have to make the case to them directly and not through the Donor Advised Fund, and talk to them about the compelling reasons why your charity is doing really important work. I think the other thing I really encourage them to do is put DAF friendly materials, owner materials, DAF-related suggestions, which is, you know, if you're going to give a gift of appreciated securities or give a gift into a trust, you can also give a gift from your donor-advised fund. And I would pepper that through your fundraising materials because many donors have them, and it'll trigger them that they, oh, I could make a gift to this charity using the DAF. And I think the third option that I talk about often is if you are a small charity and you don't want to take an illiquid asset, a lot of times your local community foundation or one of the national DAF programs can actually accept an illiquid asset, liquidate it, and then the donor can grant out the net of what's there after the liquidation to you, and you don't take the risk on of what a planned giving complex gift might be. So the way you can partner with DAF so you can process gifts that you otherwise might not get because you don't have the capacity to manage a planned giving tool and vehicle, and the DAF charity can do it.
Great, thank you. Jason, what would you add here?
I echo everything that Eileen said, and I think a good practice when you receive a grant from a donor-advised fund, I'd recommend putting the advisor who recommended that grant at the top of your prospect list. Here at the Community Trust, the average size of a donor-advised fund is about $1 million. The median size is about $350,000. So in many or most instances, these donors have already set aside capital for philanthropic use. So for charities, when you see an advised grant come in, I would move that donor up to tier 1 of your major gift prospect list and really start to cultivate them because it's likely they have additional resources available to support you. And then I strongly agree on the marketing aspect of it. Infuse that you accept advised fund grants through all of your literature, through your newsletters. I think it's really powerful to have a testimonial from one of your donor advised fund holders talking about how they made a grant to your organization from their advised fund. It was so smooth, it was so easy, and encourage others to do so.
Liz, I know you're coming from a different perspective here, but would you like to add anything?
One thing I'll add, and again, thank you for having me. I very much appreciate hearing from Eileen and Jason. One thing that we did at our most recent board meeting in California was to have just do what Jason said, and we had a DAF holder give a testimonial about why they set up their DAF and what benefit it brings to them. They also talked about another planned giving vehicle that they had established. And we were basically doing that in order to encourage other trustees to set up similar types of vehicles and to also know that those types of vehicles are available if they have friends that they'd like to refer to us.
Thank you. Well, the data you shared earlier is all from a year or more ago. So I want to take a moment to talk about what's different in 2019. According to the Philanthropy Outlook, overall giving in 2019 is predicted to be up 3.4% and up even higher in 2020 at 4.1%. Giving by foundations and bequests is predicted to lead the way. The stock market's longest rally in history ended, and the S&P 500 was down over 5% after being up nearly 20% in 2017. In recent years, many of the largest gifts going into DAFs were from appreciated stocks and securities, and this does remain true. Schwab Charitable reported that 2/3 of gifts going into DAFs in 2018 were for non-cash assets. If there's a market downturn, it's unclear whether DAFs will slow or giving to DAFs will slow or possibly decrease. Direct service charities are most interested in grants from DAFs. While making up only a small portion of overall giving, an increase can offset decreases from other types of giving. Schwab Charitable released its 2018 results a few weeks ago and reported a 35% increase in the value of grants made to a total of $2.2 billion. And 2018 was the first year under the Tax Cuts and Jobs Act passed in the final days of 2017. As expected, the end of 2017 saw a surge in giving to DAFs. But what was different in 2018? Let's move into a discussion with our experts. Jason, Liz, and Eileen, I'd like to hear from you about your individual experiences. Was giving to DAF accounts up or down at the end of 2018? And for the Chicago Community Trust and the Nature Conservancy, how about other giving? What patterns and trends are you seeing? Jason, let's start with you here.
Sure. So giving into donor-advised funds was consistent or a little bit higher from previous years. At year-end, giving was consistent or a little bit lower. Grant making from donor-advised funds increased substantially versus previous years. But I would say the biggest change we saw was reflected in the Tax Act and the interest in gifts of business interests. So donors who owned business interest, especially limited partnerships, limited liability companies, or closely held businesses, had much higher cash flow with the corporate tax reductions. And with their greater cash flow, we saw more gifts of business interests into donor-advised funds.
And Liz, what about you? Liz, do we have you here?
Sorry, muted. Just want to say a few words about the Nature Conservancy first. We are a science-based environmental organization. We're the largest environmental organization in the world by assets as well as by fundraising results. And so we have a robust fundraising operation around the world. We are in the middle of a campaign right now, and we've really upped the game in terms of our fundraising results. We are well on the way to receiving $7 billion for our global operations. So we put a lot of resource into really increasing our major and principal gifts fundraising operations. Yeah. And we can go next. Yeah. So in terms of we are a holder of donor advised funds, but it's a small portion of the way that our donors donate to us. And our largest donor advised fund is $25 million. Our smallest is $100,000, which is the required minimum. And there's a required payout of 5%, which is a little bit unusual for a lot of other donor advised fund holders. So and our contributions to donor advised funds vary widely year to year. They're pretty lumpy. But what we did see from FY16 to FY18 is a substantial increase. And you can see in the slide that FY17 and FY18 were virtually the same. And then in terms of what we've received from donor advised funds, this is much larger. We're glad to see that the trend line is increasing. And just wanted to share a few statistics here with you. So, excuse me. We're seeing steady growth in contributions received from donor advised funds from about $17 million to $39 million last fiscal year. And again, this is a fraction of our overall contributions, which are around $750 million a year. In California, we have seen substantial growth also from $2.7 million to $4.7 million over the same period. So, and in overall contributions, giving to the global organization is a little bit behind where it was last year, but it can be very lumpy given the nature of our work, which is in large part we acquire land. It's a significant part of what we do, and those donations can be really lumpy. We received a really large one last year at $165 million. So that really is skewing the results for last year in a good way. And about 1% of our donations come from donor advised funds, so which includes our membership gifts. So it is a fraction of the way that we receive funds, but we're glad to see that it's going up.
Great, great. Well, Eileen, I'm going to pass it over to you.
So I'm CEO of the National Philanthropic Trust, and we primarily are a provider of donor advised funds. We also do type 1 supporting organizations and fiscal sponsorships, but the bulk of our assets are in donor advised funds. We had a very similar experience to what Jason described at the trust. Our giving was slightly down in December, though overall across all of 2018, it was up about 8%. That being said, our grants were up 28% over the previous year. So in 2018, we're going to have a really high grant payout, which I think mirrors exactly what Chicago Community Trust experienced. I think that the market downturn in the end of December was a real dampening of the gifts of appreciated securities, and we had a big inflow of cash at the end of the year. Not surprisingly, people were waiting for the stock market to go up, and they really wanted to make a contribution. I do really believe that the standard deduction change is going to affect our world in a way that we don't quite understand yet. And I think for smaller DAFA accounts, we might see a more of an effect than the larger ones. But we also did also see a large amount of closely held stock and business interests. It's been really interesting to watch the growth that even though the growth has slowed down, the grants are really accelerated, which I think shows that people use this in two different ways. One is they don't wait to give away grants. So we had a very robust giving season the year before, and we think people use that money to give away grants aggressively in 2018. So that's one of the reasons grants were so much higher. I think the other reason is people like to give out grants regardless of where their assets are, and they see their DAF as both a regular fund and a rainy day fund. So it's the second time we've seen that it's kind of a recession. It's recession insensitive in a way, because people put money in, and then when they feel more conservative about their personal assets, they'll grant heavily out of their DAF because it's already in the charitable sector. And so we're seeing continued 20% payouts, and we've been in that arena for about the past 6 or 7 years. I think that people love online banking, and I think one of the reasons DAFs are so popular is it has a very similar feel to online banking. We have very few, less than 1% of dormant accounts, so donors open these and they're very actively grant making all the time.
Thank you for sharing that. Jason, were you wanting to say something else?
No.
All right, well, let's move on then. Our next question focuses on the payout rate. Data from recent years indicates that on average, donor-advised fund accounts pay out 20 to 22% of their value annually. And all of our panelists represent DAF sponsoring charities. Did the payout rate change in 2018 compared to previous years? And do you have any information regarding the types of charities or causes your DAF holders are directing their grants to and how it may have changed? Eileen, I know you spoke to some of this in the last question, but can we start with you here?
Sure. So we've been looking at a payout rate of about 20% for the last, I think, almost 8 years. And I think one of the reasons we see that payout rate is that donors don't, because there's not a 5% payout, they don't see it as a ceiling, which is how donors seem to behave in the private foundation. So they see this money as more fluid. They don't see it as restricted. We're always worried if a 5% is imposed, that's all donors will give, we'll actually pay out less. So we love the idea that we're paying out 20%. I think we're going to continue to see that trend ongoing. I know not every DAF sponsoring charity pays out at that rate, but I think it shows that people are doing this not to squirrel away money really, but to use it very actively. Education is always our highest percentage by far, and it's interesting because if you look at the Giving USA data, it's always religion, but we find that our donors support education a great deal, social services and healthcare, and we're happy about that. We have a lot of donors given for scholarships, but also their annual gift and other things, and we see it to very large state schools, to private colleges. I mean, it's all over the place. It's not just to one type of school.
Liz, what about the Nature Conservancy?
Well, given the nature of our organization, no pun intended, we tend to see giving from the donor-advised funds to environmental organizations. We do have a requirement that 20% of the funds stay with us. So whether that's the remainder or during their distribution period. And generally speaking, the reason someone would establish a donor-advised fund with us is because they want our advice and they are supporters, and it's just a really good vehicle for them to get a tax deduction and then pay out over time for projects that get them really excited. So I just also wanted to add in terms of what Eileen was saying, I've also noticed that different donors that I've gotten to know as donors to the California chapter, they put money into their DAFs differently. Some of them do it when they have a wealth event, and that could be retirement. And then they plan to give it out over time in kind of a steady manner. Some people just put money in every year and then they give it out right away. So, their payout rate is a lot higher. So it's really interesting to me how it's a very flexible tool for a donor, and it, of course, provides that anonymity that sometimes they're desiring, as well as it's so much easier on them for audit purposes, et cetera. It's just like, and I think the point about being like online banking is really true. There's some great online tools that the various sponsors have put together, and it just, it feels really comfortable and easy.
Great. Jason, love to hear from you about the Chicago Community Trust.
Sure. So last year, our aggregate payout rate was 24%. It was one of our highest years ever. It's traditionally between 16 and 20%, which echoes what Eileen said, well above the private foundation minimum. As we look at the grant-making areas, education is always near the top, but basic human needs and social services and the arts were top funding areas for our advised fund holders. We're a little bit reluctant to read too much into the data from year to year just because one of those very large advised funds can really skew giving. But we did engage Campbell and Company to do a donor interest survey for our donor advised fund database, our donor advised fund holders, so we could see what they're interested in and start to build educational programming to engage those donors. And the survey results were fascinating because it was basically all across the board of what donor interests are, everything from international grant making all the way to kind of hyper local neighborhood grant making with everything in between. And I just think that reflects the overall generosity and philanthropic interests that advised holders have. And at the same time, it makes them really hard to categorize as a group. You know, I'm sure Eileen can testify to this, and Liz too. You get asked a lot, what do donor advised fund holders blank, or do donor advised fund holders blank? And as Liz said, their motivations are so diverse that it's really hard to characterize them across the board as a group, which just what makes them such a fascinating group to serve.
I just to add to that, I completely agree with that. You know, we present to our board our most common grants, the number of grants we give, and our highest number is actually last year went to Planned Parenthood, which is interesting. That hasn't always been the case, but I think this idea of what they call rage philanthropy, where people are speaking their interests through their charitable giving, I think that was been motivated by some of the current events that are going on. And so people do use their DAFs in all different ways, and it's sometimes unpredictable. I think what's really interesting, though, is that, when you sit and see everything, I mean, people give to such different things. If they were sitting in the same room, they would probably get in arguments with each other. But because the donor advised fund sponsoring charity can be that flexible, we can respond to people with all different interests. And I think it's great the table is big enough for any donor to sit at it, and we welcome that.
Great. Well, this time we are going to move into a quick break for some audience questions, if we have any. Sarah, do we have any queued up?
We sure do. Obviously, this is a hot topic. So let me go ahead and get started here. We have a question from Julia in our audience. How should we be stewarding differently donors who give through DAF? Do they want to be more engaged in the life of the organization in terms of stewardship? And I'm not quite sure who might want to take that one first.
I'm happy to give it a go.
Yeah, I want to go. Go ahead.
I say you steward them like you would steward any other donor. Really focus on them as a person or a couple, family, and think about them also in terms of as future donors. I think Jason was making the point, like put that person at the top of your list because there's more money there. So I would definitely prioritize them. It is a frustration sometimes when we don't know who that donor is, and that does occur. Sometimes we feel like in the funding or the nonprofit community that we're wondering if they really wanted to be anonymous, or if maybe that was some qualification they put on a previous grant that they made through their donor advised fund, and that's just kind of sticking on their account. And we don't know that, and we won't know it. But to the degree that the donor wants to be known, just love them and steward them, and then they'll come back to you.
I just want to say that over 99% of our donor-advised fund grants go out with the donor's name on them. So we have very few donors that go out with anonymous grants. And I encourage you to treat them like any other major gift donor. They probably do have other assets. You know, you want to be talking to the individuals who gave, the next generation, include them in any major gift activities that you have, you know, thank them. I always look at walls and publications about how people thank donors. You know, some people segregate out with their gift from their donor advised fund. Other times you just see the donor's name. Sometimes you see it associated with a sponsoring charity, but I would definitely list them and make sure that you treat them in whatever way. If they wish to be anonymous, that you honor that. But if their name is on the donor advised fund grant, which it is mostly in our case, you know, that you should reach out to them. People send us thank you notes all the time to forward to the donors, and sometimes we can do it easily, and other times it's more cumbersome. So if you do know the donor's address, they can't take another deduction, but, you know, to send a thank you note to them, to thank them for the gift from their donor advised fund, I would definitely do that.
Yeah, I would only add, do not send them a tax receipt. Send them an acknowledgement. That's the key. That's the key distinction. Send them a thank you and trumpet their gift. Send a tax.
Right. You don't want them to take a second deduction.
Yeah.
That's right.
Excellent, thank you. On to our next one. I think this is in terms of just overall clarification. I've heard that benefactors are choosing to put money in their DAFs versus directly supporting nonprofits. So DAFs grow while giving to nonprofits decrease. Can your panelists respond to this? Anyone up first?
I just want to, could you restate the question? I want to make sure I understand it.
Yeah, I think the perception is that benefactors are choosing to put their money in DAFs versus directly supporting nonprofits. And so DAFs grow while giving to nonprofit organizations decrease. At least that's the perception. And so can we address that?
I could say a couple things. I mean, if you look at the, you know, even the 2% of the gross domestic product is given to charity, and even though the 2% has been pretty flat, since our gross domestic product has grown significantly, the dollar amount that's given to charities has actually grown significantly. So I think donors who are using DAFs, if you look at the 20% payout, even with asset growth, they would be liquidating these assets in 5 years, right? Because that would liquidate it. So I think people are using it as a kind of a short-term kind of charitable savings account, and they're really actively granting out. So I don't see this as a long-term strategy where the money's sitting in DAF accounts for long periods of time. And I know that some of the critics talk about that, but I see this as much more active dollars than private foundation dollars, in which they pretty much stick to 5%. So I think you can see DAFs as your partner in a lot of different ways, and I would encourage people who are major gift fundraising to think about that. I don't know, Jason, do you have anything to add on that?
I would agree. In 14 years of structuring relationships through the community trust, it was always a matter of philanthropic planning with a vehicle, as opposed to I'm going to give to my donor advised fund instead of the Greater Chicago Food Depository. Our goal as community foundations and donor advised fund hosts is to unlock more resources for philanthropy, both into and out of advised funds. And I can't recall any planning situations with donors where they were choosing one or the other. If anything, they were choosing a vehicle and choosing how to fund it so they could give more to those charities and organizations that they love.
At the Nature Conservancy, we've seen giving going up each year. So as well as I showed on the slides, the donor advised fund contributions. So we feel fortunate. And again, we are putting a lot of resource through our campaign into increasing our fundraising results. So I have had different donors go through different life stages where they will have like a kind of a lumpy income one year, and they do put it into a donor advised fund as opposed to establishing a foundation, because there's just a lot more administration in starting a foundation. So a donor advised fund feels like a flexible kind of savings account almost for giving. And then they go through their another couple of years, they might have another wealth event. They can either give it away or stick it into their donor advised fund. And I think Eileen had a great point that people are really, they have a lot of, wealthy people have a lot of different ways in which they can give to you. So some will come through a donor advised fund, some will come from other kinds of non-cash assets, and some may come from their foundation and or a planned gift. So I think the donor advised fund just is such an easy vehicle for a lot of people, and the minimums are usually pretty small. So even less wealthy donors can find it to be a really great vehicle for their philanthropy.
Yeah, Sarah, I would just add that it speaks a little bit to that lack of uniformity across advised fund holders. So for many folks, they just haven't had the time to think really deeply about their philanthropy and what they want to accomplish. They've been building their business, they've been raising their family, they've been living their lives. And so advised funds, having the flexibility to put resources in there, allows them to create a plan or create a plan of action of what they want to give, where they want to give, how they want to engage their heirs in giving. And so I think that we can assume that sometimes there's a lot more philanthropic sophistication across a lot of folks than there is just because they haven't had the time to think about it. This is a vehicle that gives them that opportunity of time as well as support sources to help guide their philanthropy through our institutions.
Great. Yeah, I really like the analogy of it being a vehicle. I think that probably resonates with a lot of the listeners here today. So thank you. I think we have time for one more question at this point. All right. So we had a question regarding corporate donations to DAFs, and if we could talk a little bit more about that. Should we head into that direction? Does anyone want to take that first?
We have about 20 corporate donor advised funds, and a company uses them instead of having a private foundation or just doing it through their marketing department or a foundation they might create. And we find that they have mostly money going in and out every year. They don't fund it long term, so they'll fund it, make their grants, and then it'll be more or less at zero or close to zero until they're ready for the next year. So I think they like the record keeping aspect of it. I think they like the fact that we cut the checks, make sure they get to the right institution, do the vetting. And so we don't seek that work out aggressively, but they find us, and sometimes the donors, a corporate person will call us and say, we'd like to start a corporate DAF. And so we do that work. It's just not nearly as abundant as individual giving.
Same for us, overwhelmingly advised funds created by individuals and families. Some neat instances of corporate use of advised funds. We had a real estate company here in Chicago. Every time the company has a successful sale of a property, they put $1,000 into the corporate advised fund, and a group of employees advises on their distributions. We had a bank that Northern Trust celebrated their centennial a while ago, actually, and created a Northern Trust Centennial Donor Advised Fund that they have a group of employees advise on. So there's some creative uses there, but overwhelmingly it's individuals and families here as well.
Excellent. So should we head back in to our presentation, Molly?
Yeah.
Okay. We have a lot more questions, by the way, but we can head to them afterwards.
Yeah, thank you for sending those in. We will try to leave time at the end for another Q&A section. But for now, we're going to move into a question about generational differences. Panel, what generational differences are you seeing among DAF holders or DAF donors? Liz, could we start with you for this one?
Sure. I would say in the way that they fund their DAF, generally speaking, in California, because real estate appreciates so highly over time, I'm seeing older folks use real estate as the way to fund their donor advised fund. With younger people that are maybe kind of I'm going to just start being specific, like in their 50s kind of thing, where they've had a good career, maybe they're thinking about corporate boards or maybe even a second or third career for themselves, and they have a wealth event, they're usually using a stock to fund their donor advised fund. So those are the two main differences that I would say I see.
Jason, what are you seeing?
Broadly speaking, we're finding that it can be often difficult to get young people's attention. Oftentimes, older generations are thinking more about legacy and perhaps, have more experience with philanthropy and are thinking about endowment and planned giving and longer-term issues with their philanthropy. We have donors who create advised funds for their kids or grandkids and, try to facilitate annual meetings or biannual meetings to encourage their philanthropy. And, when they're young and learning and raising families and building their careers, it can be tough to get them to focus on philanthropy. But again, in terms of assets and resources, it depends on, how they made their wealth and what they want to do. But I would just say the attention aspect of younger donors is probably at the top of our minds at this point.
Eileen, what about you?
Our minimum is $25,000. Some of the other programs are $5,000, and so I think our barrier to entry on having a lot of millennial donors is that can do have the ability to part with $25,000. And so, but we do have donors in their late 30s or early 40s. Sometimes it's inherited wealth. Sometimes it's been a big bonus or a sale of some capital event in their life. But I think the other flip side of that is we have donors who are older who use the donor advised fund to help train and talk to their kids about how to be philanthropic. And so they might carve off a part of their donor advised fund and start it for their kids. And often they'll find a mentor or something that will help their son or daughter, work through their giving. We had a donor that created a donor advised fund for 5 children and 2 marriages and had $1,000 for every year the person was born. And so we had a 9-year-old that had a $9,000 DAF, and because it was a family, we had agreed to create the staff. And the daughter was her aunt was her mentor, and she was finding homeless shelters that had kids that needed things, and she was really engaged. And so the older kids, it's interesting, were in their 20s, one was in medical school, and they had a hard time getting their attention because they were busy and kind of getting their careers together. I think a lot of it's your time in your life, and do you have time to devote to that kind of work? And if you want to be thoughtful, it takes time, and if you do it in a hurry, you don't really pay attention to doing research or looking at outcomes. And I think a lot of the donors do that. So rather than do it badly, they just don't do it at all until they do have the time.
Oh, interesting. That's a fascinating anecdote. Our next question that we'll move into is about big changes to DAFs. Are you anticipating any large changes to DAFs in upcoming years? At Campbell Company, we've been hearing about foundation conversions to DAFs and possible legislative changes. What issues are you monitoring? Jason, could we start with you for this one?
Yeah, I think foundation conversions are always going to be a part of the conversation. The Community Trust was one of the first recipients of a terminated private foundation to convert to a donor advised fund way back in the 1960s. I think that we anticipate continued growth in advised funds. I think we anticipate continued focus on grant making from advised funds and that myth of warehousing wealth and actual dollars out the door, and the difference between that and how advised funds are actually remarkably generous. I would also forecast increased growth and interest in advised funds just because of their ease of setting up, their ease of administration, the ease of accepting complex gifts, the ease of creating multi-generational structures, the continued knowledge that professional advisors have of donor advised funds and how well their clients are served by them. I think we'll have those lawyers and bankers and financial advisors pulling for this vehicle when philanthropy becomes top of mind for their clients. So I do think that we as a sector have an opportunity to do a better job of not only explaining, but just touting the incredible things that advised funds do for philanthropy, not only in serving donors, but also in supporting the philanthropic community. I think there's a great opportunity to do more there, and I would anticipate us doing that as a field.
Eileen, what changes are you seeing?
I think that donor-advised funds have come into some criticism based on this idea that we are sitting on these dormant assets, and I think one of the responsibilities we have is to tell the story about how aggressively the grants are being given out. One of the things that's interesting is when we've had a large number of contributions late in the year, we have a huge amount of grants that go out in January. People start grant making immediately, so they're not looking at it as like, I'm going to give it away 2 or 3 years from now. So I think that's something, is to tell the story, and I think the grants that go out can be really compelling. We often, for our board, and for our staff, we start every board meeting and staff meeting with multiple grant stories, because the impact of these grants around the country and the world is remarkable. So I think we have to continue not just to look at the data, but to hear what we're doing. I do believe that that this tool isn't going to go away. I don't know if there's going to be any regulatory issues. I think there was some self-disclosure suggestions that were made inside the Hill about disclosing dormant grant policies and saying how many dormant grants, so as a way to, dormant accounts, as a way to just describe the fact that these are active. One of the things I think is great that has just happened is there was a huge bump in the number of donor-advised funds in the last year, which was a company that was doing work-based DAF giving, much like they used to give to United Ways. So the 60% increase in DAFs in our last report was an organization, Benevity in Canada, is starting workplace giving into DAFs. And I think that's an area. So I think that, and I think millennial giving with cash-only DAFs for much, much smaller accounts are going to become popular, and the individuals are going to morph into probably larger donors as they acquire and accumulate more wealth. So I think workplace giving into DAFs and also millennial giving is going to increase with the use of this tool. And, technology can build a lot of efficiencies into donor-advised funds. And so I think you're going to see investment in technology so it can become available to a much wider group of people. But I do want to encourage, these donors are in this vehicle to give away money and to be engaged with the causes and things that are really important to them. And they put their money where their mouth is, and being their partner in giving, to me, is an enormous privilege all the time. Anywhere from the $250 grant to the $20 million grant that endows the chair, builds a building, whatever that is that they're doing. And it's a serious endeavor. And I hope that charities can look at it as an opportunity, and look at it that we want to give away money. We don't want it to sit here, and we're delighted actually when it goes out the door. We literally at NPT, we celebrate the grants we give all the time.
Great. Liz, I'm curious for your perspective on this topic as well.
Sure. Well, in California, again, I mentioned real estate. It's a pretty sure investment. Of course, the market has gone down with the dot-com bubble, et cetera. But I would anticipate that people will continue to create DAFs with appreciated real estate. I would also, we're also seeing a generational change from the original creators of DAFs to the next generation. So I will be really curious to see how that affects families and how they involve their kids, and whether or not they split up those donor-advised funds, as Eileen was mentioning. I think that's an awesome story about how to allow your kids to give and kind of set it up so that they have to give. So I think I'm going to share that story, Eileen, because I know that there are a lot of concerned parents that donate to us that really want to get their kids involved. So I love that. And then we did have a high-profile case in San Francisco Bay Area of a community foundation that was sitting on its assets. So I haven't heard of any specific legislation to address that one particular case, but I do think there will be continued scrutiny about how much is being paid out, and that this is not simply a really quick fix for people that are trying to get a quick charitable deduction. So we love to see those 20% payouts. Those are wonderful.
Thank you. Well, Now we're going to move into another round of audience questions to wrap it up. I'm going to pass it over to Sarah. Do we have any questions in the queue?
We do. So we're going to do our best to get through these. So forgive me if we're not able to get to all of them, but we're going to do our best. So we have a question regarding generational transfers. So how do most of your donors handle generational transfers of their DAF? Do they transfer to their children or spend down the account?
I would say most go successor generations. So at the Community Trust, we allow 3 total generations, the first plus 2 successor generations. But again, it depends on the motivations of the donor. So for example, Marshall Field, there's no name more synonymous with Chicago than Marshall Field. He created a donor-advised endowment fund where he terminated his private foundation and put it into the fund. And grants from the fund are limited to our endowment payout rate, which is about 5% per year. He and his wife will advise, his kids will advise, and then his grandkids will advise, and then what remains will be an unrestricted endowment for use by the Community Trust. The reason why he did that is because he wanted to ensure that his money would forever benefit Chicago philanthropically as opposed to leaving the community. So you have examples as sophisticated as that. We also have some donors who are very affluent, whose kids or grandkids are not interested in philanthropy. And so they will either roll the money into the general endowment or spend it out. We allow it to be done completely at the discretion of the donor, but I would say most have at least one generation of a succession plan.
Excellent. Excellent. Thank you. Okay, heading into our next question. This is from Sean. I've dealt with a lot of DAF donors who are trying to use their DAF to pay for event giving, including tickets, auction items, sponsorships, etc. It's my understanding DAF can't be used this way for this at all, and can't be divided to cover just the charitable amount due to IRS bifurcation rules. But people are saying charities are allowing it. Have you seen this or educated DAF donors about it?
We have a policy, of course, that's consistent with the laws, which you can't, they're called bifurcated gifts, you can't do them. So if you were going to go to a gala, you can't have the donor pay the food part and the DAF pay the charitable deduction. I will say that donors, I think from time to time may try to get around it, but if we have any inkling at all, we talk to the recipient charity, we call the donor, and we will not approve the grant. We put in our online forms that make grant requests, they actually have to actively check off a box. It's a very active check that this is not for a gala, this is not for an auction, this is not. So donors, they can't get football tickets in exchange for their gift. So before donors can submit this grant, they actually have to say that it's not something that's going to provide personal benefit. And there's a lot of examples that they are forced to check. It's a long set of boxes. If we find out it's against the law, we won't participate. We expect donors to tell the truth, and we expect charities that if they're getting the gift and they're worried about it, sometimes they call. And so we rely both on the donor and the recipient charity to be partners in enforcing this. And if I have a principle, what did you know, when did you know it, and what did you do? If we have any inkling it's for something for the donor to get personal benefit, we'll stop the grant. There's a pretty big penalty to do that. And so I think it's really unwise to do things like that. And I think almost all the DAF sponsoring charities I know don't do it. But for some reason, I don't know if occasionally people get away with it and brag about it, but I don't know anybody in the business who does it knowingly.
I would add when you talk about the boxes being checked, us too, and also with respect to the charity, the check has language on it stating that by cashing this check, you the charity certify that the donor is not receiving any impermissible benefits. We have the same, the times that we come across it is just when a donor doesn't know. Some donor advised fund holders don't know. They get asked to support the gala at the Art Institute. They recommend a grant, and then we flag it accordingly.
We have a donor guide, and we hope people read it, but we know sometimes they don't read it until they hit one of these brick walls, and then they go to the donor guide and go, oh, that's right, as you said in here, I'm not allowed to do that.
Great, thank you. And this question is for you, Liz. What financial management mechanisms does a nonprofit organization have to have in place in order to hold staff? Any thought on size of organizational budget?
No. We have a very robust planned giving group that is centralized within our organization, and we have historically, given our land trust roots, been very adept at land transactions. So really, we've grown up taking some kind of complex gifts. So in order to create to sponsor Donor Advised Fund, it didn't take that much heavy lifting for us to be able to do that and offer 1 to 2 investment options. Again, we are not nearly as diverse as a community foundation or one of the institutional charitable organizations that is sponsoring many deaths. So it's one tool in our toolbox. I would say that you probably have to have a pretty robust centralized organization in order to have the resources to allocate to it.
Great, thanks, Liz. That was really helpful. Okay, heading into our next question. What are some talking points that could be employed to enforce the understanding that the advisors to the fund really do make the decisions about where and what to fund and not the agency holder?
Okay, could you?
Agency holder?
So agency holder meaning the Nature Conservancy, your organization specifically is what they're referring to regarding the agency holder. And I can reread the question too, if that's helpful.
That'd be helpful.
Okay. So what are some talking points that could be employed to enforce the understanding that the advisors to the fund really do make the decision about where and what to fund, and not the organizations themselves?
Well, some context around this would be helpful. I would argue more the other way, that these are recommendations subject to the review and approval of the sponsoring charity that hosts the fund. I think that's a really clear distinction. Practically, those of us that are in the space, we seek to honor our donors' philanthropic intentions, provided that the charitable organizations are in good standing with state and federal regulators. But I don't think any of us would be comfortable stating that these are anything more than recommendations. I think Eileen would feel the same way.
I do, and we vet every single grant for not just as a legitimate grant, but for a legitimate purpose, and there's no private benefit. So that's a big part of our grants team, what they do every day. So there are recommendations, and we say no. We actually got audited by the IRS about 15 years ago, and we had, at that point, it was a real paper file of a binder of all the no's that we had exercised over time when people made requests that we couldn't honor, and they were glad to see that, because I think sometimes there's a mistaken thought that the donors just ask and we just send the grant out as fast as we can, and that's not true.
Sarah, one thing I would say, I don't know that it really gets to the intent of the question, but hopefully it's helpful. We have a major gift and principal gift shop in California, as do all of our state chapters. And we have 2 different forms that we use in documenting larger gifts that are going to be paid over years. One is a pledge form, which most organizations will be familiar with, and another is a gift intention form. And so we're very careful when we speak with the donor about making a pledge, that if we know that they are usually using a donor advised fund, we will give them the gift intention form, which says that they intend to give the gift. But it is not considered to be a pledge, a formal pledge. So we're very careful in the way that we document those two different types of multi-year gifts. It allows us both to book them as a pledge, as the larger gift, I should say. But we definitely want to talk to the donor when they're making that commitment or that intention, that we know how they expect to pay for it, so that we can provide them with the right paperwork.
Excellent, thank you. And this question is from Brooke. How can a nonprofit share the potential impact of a disbursement from a DAF to their organization? Manager of the fund becomes the gatekeeper, and in a competitive landscape, one worries that there's not a way to elevate a giving opportunity to this generous community of donors.
I didn't hear the entire, you broke up a little bit, so I couldn't hear the entire question. Can you repeat it?
Yeah, you bet. So how can a nonprofit share the potential impact of a disbursement from a DAF to their organization? The manager of the fund becomes a gatekeeper, and in a competitive landscape, one worries that there is not a way to elevate a giving opportunity to this generous community of donors.
So
I would say,
go ahead,
go ahead, Eileen. Okay, so I would say from the Community Foundation standpoint, we have our own endowment, of which we have discretion from which we make grants, and then we have a very large donor-advised fund pool as well. Every organization that has ever received a grant from the Community Trust or has registered in our grant portal called Grant Central is a part of our donor-advised fund database, and their institution is searchable within the database. Also online, we have an Amazon-like feature that promotes organizations that are similar to those that the donor has granted to in the past. But again, I think this speaks to more of what we discussed when we initially opened the call, is divorcing this concept of advised fund grant making as equivalent to institutional grant making. We really think of this as individual giving facilitated by institutions, and cultivating relationships with those individual donors is the most important. For us, if you've received a grant from the trust, community trust, or if you're, in the presently or in the past, or if you've been a part of our grant making portfolio, or if you've even applied, you're on the advised fund radar in the sense that donors can search and find you. But again, I think the gatekeeper is truly the donor themselves and not the institution of the community trust or other host.
Sarah, I might add that as an anecdote, we have one volunteer leader who is on our California Leadership Council who has a donor advised fund with our local community foundation, and they have a funders group around the environment. It's a group of like-minded donor advised fund holders that want to share information and talk about the organizations they support. And she's been a wonderful ally for us to raise the flag for the Nature Conservancy, and also to bring those donors to a property where we're doing a project so that they can get some hands-on experience there. So I would say to nonprofits, especially I think probably in the community foundation realm, if there are similar types of like-minded individuals, ask that person to look for avenues to really help you to advocate and be an ambassador for your organization.
Excellent. We have 1 minute left, so I want to just close or give the opportunity to our distinguished panel to have just a few closing thoughts. So Jason, do you want to, not to put you on the spot, but any closing thoughts you want to say regarding DAFs? We have a number of questions that we promise to get back to all of you on those. But Jason, any quick thoughts before we end today?
Oh, we're just proud to support your amazing work, so thank you for giving us the opportunity to do so.
Great, thank you. And Eileen?
I want to just echo something Jason said in his last answer, which is, and to reinforce, 99% of our donors actually identify who they are and that they're individuals who are really interested in your cause. So they're the audience, I think, for the grant making ask and not the sponsoring charity. But it's an honor to be a vehicle for giving and to be able to facilitate all this grant making. And while, 80 years ago, these didn't exist, I think it's technology and in some ways, the democratization of philanthropy that's brought this into popularity. And so I think it's a great tool that people have really embraced. And I think it's going to be around for a long time and start to be used in all different ways.
Thank you. And Liz?
I meant to say when you were asking me what do I forecast for donor advised funds, that of course we are at the mercy of the economy. So depending on how the stock market does, and we have a lot of IPOs that are expected in California in this next year. So I know they are looking very much at how the economy is doing too. But there's a huge amount of wealth creation that's happening right now, and there's a lot of wealth out there. So I'm excited to work with the sponsors of donor advised funds and the community foundations that are local to educate those that are interested in the environment about us, and of course other organizations that we partner with. So I think, as Eileen said, it's just going to go up from here.
Great. Well, that's all the time we have today. I feel like this should have been like a 4-hour webinar considering the amount of questions that we still have to address. But thank you so much to everyone for joining us, and a special thanks to Jason, Liz, and Eileen for participating in this important conversation. Please look out for an email that will include a link to a recording, and make sure to check out our other wonderful webinars and content that we have on our website. So with that, thank you so much. I hope everyone stays warm across our national reach. So take care, and we'll be in touch.
Thank you.
Thank you.
Bye.